Welcome to the Monday edition of the Tech Stocks Daily Podcast. We're kicking off the week with some sizzling tech updates. First, we're diving into Spotify's latest price hikes and how they're shaking up the stock market. Next, we've got Roaring Kitty making waves again with a jaw-dropping GameStop position that's reignited meme stock mania. Then we'll look at Microsoft's major plays in AI and cloud while trimming its workforce. Finally, we'll wrap up with Google's latest Pixel leaks and controversial business review policies. Buckle up, it's going to be a thrilling ride. Ladies and gentlemen, tech enthusiasts and Spotify premium plan holders, hold on to your headphones because today's top tech story is all about Spotify's latest moves to hit your wallet a little harder. Spotify has been the talk of the tech town today. And no, it's not because of a new catchy playlist or an AI-generated mixtape. The Swedish streaming giant has announced yet another price hike for its premium plans in the US. This marks the second time within a year that Spotify has decided to up its prices. So why all the fuss? Allow me to break it down for you. Starting next month, Spotify's most used plan, the premium individual plan, will cost $11.99 per month, up from $10.99. If you're sharing a duo plan with your special someone or your favorite roommate, you'll be paying $16.99, up from $14.99. And if you're on a family plan, expect a $3 bump, lifting the cost to $19.99 per month. The student plan, though, graciously remains untouched at $5.99. You might be wondering, what gives Spotify? The company has stated that this price adjustment is necessary to continue to invest in and innovate on our product offerings and features. Essentially, this means they want to keep freshening up their app with new features while also remaining competitive in the ever-intensifying streaming wars against big names like Apple Music and Amazon Music. These changes have naturally sparked a buzz in the stock market. Spotify's shares reacted positively to the news, jumping by around 5%, touching a price above $310 per share. Investors seem to be optimistic about the company's ability to boost its profit margins through these price hikes. And it's not just about adding coins to their coffers. Spotify has been trimming down expenses by reducing marketing budgets and implementing layoffs to tighten up their financials. The company has made it clear they're keen on improving their profit margins. Further financial maneuvers include exploring tailored subscription offers, possibly eyeing segments like audiobooks and podcasts to draw in more users willing to pay a premium for specific content. All this is happening at a time when the company has been showing promising growth numbers. In their first quarter report, Spotify revealed a 14% increase in premium subscribers, bringing the number up to 239 million. They also hit a record quarterly gross profit of over 1 billion euros, riding high on trimmed marketing costs. Now, if you're thinking all this is going to make Spotify too pricey compared to other services, you're not wrong. This makes Spotify's individual plan more expensive than Apple Music, which sits at $10.99 per month, and significantly higher than Amazon Music's $9.99. But given Spotify's vast library, user-friendly interface, and unique features like personalized playlists and podcasts, the company seems to be banking on its value proposition to justify the price bump. In summary, Spotify's price hike is all about bolstering financial health and continuing to innovate, even if it means asking users to shell out a bit more every month. Whether these moves will keep the loyalists and attract new subscribers remains to be seen. So if you're a Spotify user, get ready for that email notifying you about these changes, and perhaps start rethinking your monthly budget. For now, let's watch this space to see how these price hikes impact the streaming giant's long-term growth and subscriber loyalty. Hold on to your hats, folks, because GameStop is back in the spotlight today, and it's not just another day in the meme stock world. Our old friend Keith Gill, also known as Roaring Kitty on YouTube and X, and Deep Faring Value on Reddit, has resurfaced, and it's got the trading world buzzing. So why the excitement? Over the weekend, Roaring Kitty posted a screenshot revealing a jaw-dropping $181.4 million position in GameStop. Yes, you heard that right. $181.4 million. This mega position includes 5 million GameStop shares worth $115.7 million and 120,000 call options priced at $20 each, expiring on June 21st. If you want to see jaws hitting the floor, just take a peek at Reddit. The announcement has caused GameStop shares to skyrocket. At one point, they were up over 70% in pre-market trading. While the stock closed up 21% at 28, it did experience some wild swings throughout the day. Naturally, this has reignited the meme stock mania, with other high-interest names like AMC also seeing bumps. AMC shares were up 11.6% at one point, trading at $4.80. Jim Cramer added his 2 cents, cautioning investors on CNBC to take profits and run, labeling GameStop's business as not great and AMC's as downright bad. According to Cramer, GameStop is dealing with a declining situation and needs to raise more capital to transform its business, although he did concede that AMC's financials seem worse due to repeated stock dilutions. Meanwhile, GameStop is gearing up to report its first quarter financial results on June 11th, keeping investors on their toes. The sudden resurgence isn't just limited to stocks. On social media, Roaring Kitty posted a cryptic Uno reverse card on X, hinting at a reversal in his previous E.T. the Extraterrestrial themed farewell. Whether it was a farewell or a never mind I'm back move, the impact is undeniable. In the world of meme stocks, a single post can lead to a frenzy of buying action, and Roaring Kitty's influence remains potent. It's worth noting that Roaring Kitty's return has once again pitted retail investors against institutional short sellers. According to data from May 30th by S3 Partners, GameStop short sellers are nursing hefty month-to-month losses nearing $1.4 billion. Hedge funds like Citron Research have announced their short positions, and they are feeling the squeeze. Why is this such a big deal? Gil, who gained folk hero status during the 2021 short squeeze, dramatically flipped the script on hedge funds that had counted on GameStop's decline. With his new reveal, he could be on the brink of becoming a billionaire if the stock continues to rally. His move is fueling retail investor excitement, shaping the battlefield for yet another showdown. So whether you're a seasoned investor or meme stock newbie, Keith Gill's return is a powerful reminder that in the stock market, especially in the realms of Reddit and Wall Street bets, anything can happen. Tune in as we follow this saga, because it looks like the GameStop roller coaster has just begun its next wild loop. Hey tech enthusiasts, get ready for some juicy updates because today's news is packed with everything Microsoft. The tech giant is making waves, and it's not just for one reason, but several. Let's dive right in. First up, Microsoft is laying off hundreds of employees from its Azure cloud business. According to sources, the layoffs are affecting teams within the Strategic Missions and Technologies division, including Azure for Operators and Mission Engineering. SMT, led by former Azure boss Jason Zander, was supposed to be the incubator for moonshot projects like quantum computing and even space initiatives. However, as we know, Microsoft's partnership with OpenAI has turned it into a leader in generative AI. This shift in focus might be the reason for these layoffs. Oh, and speaking of layoffs, don't forget that Microsoft announced plans to cut 10,000 employees earlier this year and has been following through with additional rounds since then. But wait, it's not all grim news for the Redmond-based Titan. Microsoft is also upping the ante with a colossal $3.2 billion investment in AI and cloud infrastructure in Sweden. This mega investment aims to deploy 20,000 advanced GPUs at data centers in Sandviken, Gävle, and Staffanstorp, improving AI capabilities and cloud services. Microsoft's president Brad Smith mentioned that they're not stopping here. Expect more exciting announcements later this year. The company also plans to train 250,000 Swedes with AI skills, which is about 2.4% of the population. That's a massive commitment to bolster Sweden's competitiveness in the AI era. And rounding out our Microsoft marathon, the company has confirmed more layoffs, this time hitting its mixed reality division, which works on the HoloLens 2 augmented reality headset. Despite the cuts, Microsoft assures us that they'll continue selling HoloLens 2 and supporting existing customers. Interestingly, the US Defense Department remains a key client even though soldiers reported experiencing nausea with the gadgets. This news follows last year's hardware restructuring and reduced investments in augmented and virtual reality. However, Microsoft hasn't entirely left the mixed reality trend. They're still pushing projects like Mesh for Teams, which lets people in different locations interact in 3D. Last but not least, a shout out to ARM's news at Computex 2024. ARM Holdings announced plans to create 100 billion AI-ready ARM devices by the end of 2025. This British chip designer, already seeing a boost thanks to Microsoft's upcoming AI-packed PCs, aims to capture over 50% of the Windows PC market in the next 5 years. That's a significant goal, but with both ARM and Microsoft doubling down on developer tools, it seems entirely achievable. So there you have it. Microsoft making tough but strategic cuts while splurging big bucks to solidify its AI and cloud supremacy in Sweden, all while staying committed to mixed reality and backing ARM's ambitious goals. Just another average day for the tech giant. Today we're diving deep into the dazzling world of Google. From academic treasure hunts to cutting-edge smartphones and even some controversial moves, Google's got it all covered. Let's get to it. First up, Google Scholar is making waves in the academic world. Ever wondered how to nail those research papers without drowning in a sea of irrelevant results? Google Scholar's here to save the day. Designed with students, researchers, and academics in mind, Google Scholar is a free-to-use search engine that pulls up scholarly articles from a myriad of credible sources. Think of it as the superhero you need when your term paper is on its last leg. However, watch out. Not every article is free to access, and peer-reviewed gold can sometimes come at a price. But with abstracts and descriptions often available sans cost, you can get a good sense of whether shelling out is worth it. Remember, folks, not all scholarly work is created equal, so double-check those journal credentials. Moving on to the juiciest news of the day, Google's Pixel 9 Pro leak has tech circles buzzing. Thanks to RosetteKid, we've got the scoop on Google's upcoming flagship, the Pixel 9, Pixel 9 Pro, and Pixel 9 Pro XL. The early benchmarks are jaw-dropping, showing a significant boost in processing power, up to 34% compared to the Pixel 8. Expect these new models to take AI capabilities to the next level. If you thought your current smartphone was smart, prepare for a quantum leap. With AI becoming integral to our devices, the Pixel 9 is set to redefine how we interact with technology. Any Apple fans out there? Stay tuned, because even Apple might hop on the AI bandwagon soon. And here comes the plot twist, Google's controversial decision regarding business reviews. Amidst the ongoing Israel-Hamas conflict, Google has blocked new reviews for businesses in Israel and the Palestinian territories. Intended to curb misuse during chaotic times, this policy has left many small business owners in a lurch. Imagine running a cafe in Ramallah that averaged 5 reviews a week, only to see it all freeze overnight. Business owners argue that instead of a blanket ban, stricter content moderation could have been a better path forward. What do you think about Google's approach? Lastly, YouTube gets a facelift. Alphabet's shares have been on a tear, up 23.5% year to date, much thanks to new YouTube features. They've redesigned the cast menu, added remote control options for TVs, and expanded YouTube Create to more countries. Plus, channel pages now sport sleeker designs, improving the user experience. With the global video streaming market set to grow at a 21.5% CAGR, Alphabet is well poised to capture more eyeballs and boost its financials. So what's your take on all things Google today? From academic resources to smartphone innovation, controversial policies, and YouTube upgrades, hit that comment section below and spill your thoughts. How do you feel about the Pixel 9's AI capabilities? Is Google Scholar your go-to academic buddy? Do you support Google's review policy amidst conflicts? Let's get the conversation rolling. Remember to like, share, and subscribe for more tech tidbits. Until next time, keep those gears whirring and stay tech-savvy. All right, tech fans, let's talk investing. Today's hot ticket is Spotify and their recent moves that could shake up your investment strategy. Straight off the bat, based on today's news, I would buy Spotify stock, and here's why. First, let's dive into the price hikes. Spotify announced increases in their US premium subscription costs, which has already shown a positive reaction in the stock market, with shares spiking around 5%. Investors see this as a move to boost profit margins, which is crucial for any company looking to stay competitive. To give more context, the premium individual plan is going up by $1 to $11.99 per month. Duo plans will now cost $16.99, up from $14.99, and the family plan is seeing the biggest bump to $19.99 per month, a $3 increase. Only the student plan remains at $5.99. This pricing strategy not only increases revenue, but also showcases Spotify's confidence in their value proposition amidst fierce competition from Apple Music and Amazon Music. Next, let's talk about growth. Spotify has been experiencing significant growth, with a 14% increase in premium subscribers, now at 239 million. Their first quarter report also showed a record quarterly gross profit of over 1 billion euros. The company is tightening its belt by reducing marketing budgets and even laying off staff to achieve better financial health. All this points to a company that's not only growing, but also keen on becoming more profitable. Moreover, there's good news for investors who like diversification. Spotify's plans to explore tailored subscription offerings, including segments like audiobooks and podcasts, indicate that they're not putting all their eggs in one basket. This diversification can potentially attract more users willing to pay for specific premium content, widening their revenue streams further. While the increased prices could make Spotify more expensive than some competitors, it's their unique features like personalized playlists, exclusive podcasts, and a superior user interface that give them an edge. Investors seem to buy into this value proposition, reflected in today's stock price bump. Remember, investing always includes risks, and there's more to consider if you think of joining the Spotify club. The company's long-term success will hinge on maintaining and enhancing its innovative edge and subscriber loyalty amidst the price hikes. So there you have it, a buy recommendation based on today's promising financial maneuvers, growth numbers, and strategic outlook. But hey, I'm not a financial advisor, so as always, make sure to do your own research and consider your own risk tolerance before making any investment decisions. Keep those wallets tech-savvy, folks. What a whirlwind in the NASDAQ world today, folks. From Spotify's double whammy of price hikes and stock jumps, to Roaring Kitty's jaw-dropping GameStop position reigniting meme stock mania, and Microsoft making major plays in AI and cloud while trimming excess, it's been a day full of highs and lows. And let's not forget Google, stirring up excitement with academic tools and next-gen smartphones. If you found this roundup helpful and want to stay in the loop with all the latest tech news, don't forget to hit that like button, smash the subscribe, and share this video with your fellow tech enthusiasts. And hey, make sure to tune in tomorrow for another action-packed tech news update. See you on the flip side.